Greg handed me the financial disclosure on a Wednesday evening. He slid it across the kitchen counter like it was a grocery list. 32 pages, 16 years of what we had built together, reduced to columns and line items, and a signature at the bottom that was supposed to mean, "This is everything." I thanked him. I folded it in half, and then I drove it directly to my attorney's office. We had been married 16 years. I had started my marketing agency 7 years into the marriage, built it from 2 clients and a spare bedroom to 14 employees and an office downtown. Greg ran a mid-sized consulting firm, his own company, founded before we met, still operating, still bringing in contracts. We had combined finances, we had separate businesses, and when things started falling apart 18 months ago, I knew that untangling what was mine from what was his was going to require someone who understood numbers better than either of us. I hired a forensic accountant in February. Her name was Linda Cho. She had testified in 41 divorce cases. She had a way of looking at financial documents the way a surgeon looks at an X-ray, not just seeing what was there, but immediately clocking what was supposed to be there and wasn't. I handed her Greg's financial disclosure on Thursday morning. By Friday afternoon, she called me. She had found the first discrepancy. The word discrepancy is polite. What she had actually found was a pattern. Greg's consulting firm showed a notable dip in revenue over the previous 8 months. 3 large contracts, clients he had held for years, appeared to have been invoiced later than usual. Not dramatically, just by enough. Enough to push the income into the next fiscal period. Enough to make the snapshot we were capturing look like his business was worth less than it was. "This happens," Linda told me. "It's called income deferral. It's one of the oldest tricks in the book." She kept looking. By the following Monday, she had traced $200,000, not hidden in one place, moved carefully. Delayed invoicing at the consulting firm. A transfer to an account in his brother's name, framed as a personal loan, no signed agreement. A series of smaller withdrawals over 6 months in amounts just below the thresholds that would have triggered automatic review. $200,000 structured specifically to disappear from the paperwork he handed to the court. I did not call Greg. I sat with what Linda had found. I brought it to my attorney, Patricia Moore. She had handled complex divorce litigation for 22 years. She looked at Linda's report for a long time before she spoke. "He's going to claim it was ordinary business practice," Patricia said. "I know," I said. "So we need someone who knows his business." The deposition was scheduled for the following month. Greg's attorney asked, during the preliminary paperwork phase, who had prepared Greg's business financials over the past decade. The answer was Raymond Park. Raymond had been Greg's accountant for 11 years. He knew the firm's books the way a person knows their own handwriting. He had filed every return, reconciled every quarter, signed off on every year-end statement. We had him subpoenaed. Raymond Park arrived at the deposition wearing a gray suit and an expression I recognized. It was the expression of a man who had been placed in an impossible situation and had decided the only way through it was honesty. He sat down. He was reminded that he was under oath. Greg's attorney went first, careful, methodical, trying to establish that the delayed invoicing was routine, that the pattern Linda had identified was simply how the business managed its cash flow, that there was nothing unusual about any of it. Raymond answered carefully. Then Patricia took over. She asked him about specific contracts, specific dates, the gap between when the work was delivered and when the invoices were sent. Raymond answered each question without hesitation. He had the records. He knew the records. And then Patricia asked him a single question. "In your 11 years preparing financials for this firm, had you ever seen a comparable pattern of invoice delays in any previous fiscal year?" Raymond was quiet for a moment. "No," he said, "I had not." The room was very still. Was there any operational reason for the change in invoicing timing? Another pause. Not that I was made aware of. Greg's attorney called a recess. When we came back, the conversation had changed. The transfer to Greg's brother was harder to explain than the invoicing. There was no signed loan agreement. There was no promissory note. There was no documentation of any kind suggesting this was a loan rather than a gift or concealment. Greg's attorney eventually argued that it was a personal matter between brothers, that it predated any formal divorce proceedings. Patricia laid out the timeline. The transfer had occurred 11 days after I had told Greg I wanted a divorce. 11 days. The money had moved 11 days after that conversation, in an amount that exceeded our state's threshold for mandatory disclosure. It had not been disclosed. The settlement negotiation that followed was thorough. Patricia did not have to raise her voice once. She simply placed Linda's report on the table, pointed to the line items, and waited. Greg's attorney made several arguments. Patricia responded to each of them with the same document. By the time we left that room, the settlement had been restructured to account for the full value of Greg's firm, based on actual revenue projections, not the artificially suppressed numbers from his disclosure. The transfer to his brother was treated as a marital asset, not a loan. I did not get everything I wanted, but I got what was accurate. And accuracy, it turned out, was worth exactly $200,000 more than what Greg had planned to give me. I went back to work the Monday after the settlement was signed. There was a pitch meeting at 9 o'clock. 3 new clients in the pipeline. One of my account managers had stayed late to prepare the decks. I walked through the front door of my agency and stood in the lobby for a moment. The same lobby I had built from scratch, the same team I had hired and trained, the same work I had done for 7 years while we were married, work that was mine, that had always been mine, that no column of numbers was going to take from me. I thought about Greg standing in the kitchen, sliding that disclosure across the counter. I thought about what he had believed when he did it, that I would take the number at face value, that I was not paying attention, that I trusted him, and that trust would make me easy. He had known me for 16 years. He had not known me at all. If you are going through a divorce or think you might be, document everything now. Before any conversation, before any paperwork. A forensic accountant does not require a court order. You can hire one yourself at any stage to review financial records and identify irregularities. The earlier you bring one in, the clearer the picture you will have before the process begins. What Greg did not understand is that hiding something does not make it disappear, it just makes it findable.